please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening, you're watching CNBC TV18 and this is After the Bell. Let's take a look at the top stories that we are tracking at this hour. Markets recover in the second half to close comfortably in the green. IOC, SBI and TCS contribute to the upsurge. Mid-caps also have a strong day, but Tyre stocks burn out.
We have taken full impact of GST transition in our quarter financial statement.
Tractors rescue M&M in the first quarter. Even as the company reports a muted set of first quarter earnings, company takes a 145 crore rupee hit due to GST transition. Auto sales remain sluggish. HPCL stock rallies in trade. Company's gross refining margins beats estimates in the first quarter, even as profits and overall margins disappoint.
Mr. Premji himself, within hours of that rumor coming out, wrote an email to all employees completely rejecting it.
In an exclusive interaction with CNBC TV18, Wipro chief Abid Ali Nimchowala denies rumors that Azim Premji is looking at exit option, as that they are holding on to the $15 billion target by 2020.
If this is the case, I invite a public debate in front of media. Mr. P. Chidambaram, KP Krishnan and Ramesh Abhishek.
A day after SEBI penalized him for insider trading in the NSCL case, Jignesh Shah cries conspiracy, claims there were no violation but evades most questions at a press briefing. Congress leader Jairam Ramesh challenges the Finance Act in Supreme Court, argues that Section 182 will compromise the independence of tribunals. Court agrees to hear the case. Let's start with a quick check of the equity markets. Markets rallied in the second half of trade to end at a high point in today's trade. The Nifty managed to end at near record highs and the Sensex recovered about 200 points from its day's lows to end with gains of about 87 points. The Bank Nifty mirrored this and recovered 100 points to end with gains of almost 150 points. The mid-caps ended with slim gains of 0.25%. Prashant Nair is here with a quick snapshot of today's trading session. Prashant, that was a smart comeback on the Lal Street.
It looked iffy, it looked tentative, but finally, by close, the market sort of came back. And how? The Nifty ended higher. And by the way, we are not closer to 10,000. Yesterday, we did break 10,000 for a brief bit. But today, we were closer to 10,100 and not, anywhere near 10,000. So it's good. Nifty Junior, which is the 50 biggest stocks after Nifty 50, that index also went up and strongly. So, that's a very actively traded part of the market. And of course, the mid-cap index came back very well. Bank Nifty, which was the big pressure point, well, no problems today. It recovered almost half of what it lost in trade yesterday. So let me take you through what happened individually. Oil marketing companies on fire. IOC, HPCL, BPCL. You can call it great results. You can call it the sector not really doing anything for the last couple of months, while the Nifty had moved up almost 15%. But the sector came back very strongly. NBFCs were looking very good. So, it was a mix. There were MFIs like Bharat Finance, part MFIs like Equitas. There was PNB Housing, which did very well. There was Repco, which is a pure HFC, which did very well. There were big gains in stocks like Mahindra and Mahindra Finance. Numbers a couple of days back were nothing to write home about, but the stock's done pretty well. Titan, big gain on a big company, sector leader there, 9-10% gain. RCF is sort of actively traded. That did very well as well. Two specific sectors which kind of saw a fair bit of damage. One is tires. Numbers have not been great. CEAT has reported, MRF has reported, Apollo will. It's been a humongous run-up. Stocks have doubled essentially in the last 1.5 odd years, and that sector was under pressure. And pharma, no bottom in sight at all. So DRL, Biocon, and a couple of others, the big losers between 3, 5, 6% once again in trade. Back to you.
Okay, Prashant, thanks for joining in with that. Let's move on. Finance Minister Arun Jaitley today announced the creation of the new PSU exchange traded fund. Now, the ETF will be called Bharat 22, and as the name suggests, it will comprise of 22 central public sector enterprises, PSU banks as well as government SUTI holding. The government will also put a sectoral cap of 20% for various sectors, including the new ETF. Here out Finance Minister Jaitley making that announcement.
A Bharat 22 ETF has been created. The 22 companies / investments comprise of CPSE, public sector banks, and some strategic holding in SUTI. It's a diversified portfolio of 6 sectors. That is basic materials, energy, finance, FMCG, industrials and utilities.
Okay, let's shift focus to earnings corner. Mahindra & Mahindra posted a subdued set of first quarter earnings. The company missed estimates on all major parameters. Naveen Shetty, who has been doing all the number crunching, is here with the details. Naveen, what's the verdict?
So if you see, it's been a tad below estimates what the street was expecting. Talking about the margins, that was the one which was the biggest hit. Margins came in at around 13.2%. Remember, the street was expecting anywhere around 14%. Why was this a hit? One, because of the GST impact. The other being the raw material prices. Remember, the raw material prices have been increasing almost 20% on a year-on-year basis. Even the revenue, that has, if you see, that has been more or less in line. But if you counter in the GST impact, the revenue was up 6% at around 11,094. The biggest hit in the revenues as well as the margins clearly was the automotive segment. Automotive segment, remember, has been a key drag for M&M maybe for the last, 2 to 3 quarters. And that is one reason why the margins for automotive segment are at around 7%. Tractor segment, that is where the steady growth has been. But remember, one thing which the street doesn't like is tractor segment revenues going ahead will be more or less not that sustainable owing to the monsoons, the erratic monsoons that we are seeing. So till the time the company doesn't give a push towards PV segment, we will see some kind of a pressure going ahead. But in terms of the quarter 1 numbers, more or less subdued on the back of subdued margins. Back to you.
We have taken full impact of GST transition in our quarter financial statement, and we have completely 100% compensated the dealers for any loss that they have had. That's the reason it's 144 crore, because all the money, all of this actually is going to the dealers. What we are doing is compensating them for the loss that they will have in GST transition.
Continuing with earnings, oil and gas major HPCL reported a subdued set of earnings. The company missed estimates on profit but ended up reporting a beat in the EBITDA front. Stock, however, rallied in trade despite soft earnings. Varinder Bansal is here to tell us just why. Varinder, why did we see the stock in the green despite a weak set of numbers?
Well, thank you so much. What a day for OMCs. Clearly, no one expected this kind of reaction coming in. HPCL results, you got to divide HPCL into 2 parts, the results and the integration with ONGC. The results, believe me, they were not the one to mark 10% move on this company today. The results were weak on the face of it. The total income, excluding excise, of course, profit, EBITDA margins, they were low. We were expecting nearly 4.5%, 4.1%, 4.2% EBITDA margins. They came at nearly 3%. The profits were down by nearly 50, 60 crores. So they were not, something which could take 10% higher. But the other thing which is more important as per me is clearly the integration with ONGC. Now, a lot of talks were going into the market that, there could be something coming out today in terms of some premium being paid to, HPCL shareholders or not. Nothing came out till now, officially, but that is the thing going on. HPCL, it had moved down. It has recovered now. People are waiting with a bated breath that what happens to the integration, the swap ratio, any premium or not, any independent value or not. So a lot of buzz which was going around in the market. But if you're watching out for the numbers, if you remove the inventory loss, management said that the GRMs were over $8 per barrel, which is a good thing, and that is why the stock would be higher. But the entire street is a lot bullish on the entire OMC pack. So let's see what happens on Monday. Whether there is more upgrades which come or not. But along with, HPCL, it was IOC which also took the cake away. The market cap for IOC moved past 2 lakh crores. Now it's the 11th largest company in India in terms of market cap. It's higher than ICICI Bank, higher than Kotak Mahindra Bank, higher than L&T, Bharti Airtel. So, as I said, a lot was happening on the OMC space. We'll be waiting for the brokerage reactions on HPCL.
Okay, Varinder, thanks for that. Let's take a very quick break. On the other side, a day after SEBI penalized him for insider trading in the NSCL case, Jignesh Shah cries conspiracy. Breaks his silence after 4 years. We'll get you details when we come back. Today, we are holding on to our target of $15 billion in revenue by the year 2020. That's the word from Wipro CEO Abid Ali Nimuchwala in his first interaction with an Indian television channel at the firm's newly set up Innovation Center in Mountain View, California. He also told Shireen Bhan that the IT major expects its margin to surge to over 20%. He also added that Wipro will continue to focus on acquisition. Here's an excerpt.
Called it ambition. 15 by 20. So it is ambition, it has helped the entire company.
But you'll have to change, you'll have to push back the 2020 period, won't you?
So,
or unless you still think that maybe through acquisitions, etc., you have a chance of being able to achieve
I think there's a good chance, but at the same time, if we take one extra year to achieve it, if we get to 14 billion instead of 15 billion, I don't think that we've not achieved the ambition.
So you're still holding on to
Absolutely.
I want to talk to you then about the margin aspiration as part of this $15 billion plan, and you had sort of spoken of a range of between 20 and 22%. You're between 16 and 18%, much lower than your peers at this point in time. Infosys at 24%, TCS at over 23%. So what can we realistically then expect as far as margins are concerned?
So while we don't guide on margins, I think there is headroom for margins to improve. We looked at our margins and we were aware that as we do acquisitions, some of those acquisitions come with a lot of intangible amortization, and that kind of takes the margins down. As those acquisitions are starting to deliver growth, and as we continuously drive efficiencies, and especially hyper automation, that is through our homes platform, we are able to drive productivity significantly in all our fixed price engagements. That margin gap between what we think is realistic for us, which is 20 to 22%, and where we are right now, which is around 17%. I don't feel there is a problem to get to our
by when do you believe?
Again, as I said, we don't guide on margins, so I won't be able to get very specific.
How confident do you feel that on account of the high utilization, improved productivity, automation, etc., that you are going to be able to get closer to the 20% range sooner rather than later?
Yeah, so we've not given it a date, but yes, absolutely, sooner rather than later.
Do you believe that on the back of all the changes that you've been able to do, the acquisitions that you've made, the transformation that you've started to roll out, do you start to see the impact of that now actually kick in as far as earnings are concerned? Because as I pointed out, you continue to lag your peers at this point in time. So do you believe that now we're going to start to see the impact of this as far as your earnings are concerned?
Absolutely. You should be able to see the impact, and there are already green shoots as we share with the street as well. At the quarterly earnings, I shared that the top 25 customers, each one of them grew, and our growth of top customers is higher than the average growth of our customers, our company. Also, we shared that specific markers that we identified for ourselves across the 6 themes, and there's progress on each one of the markers. We also added 2 more customers in the $50 million annual revenue range. So all these are early signs of us achieving industry level growth going forward.
Okay, let's get you the big story from the banking sector. Lenders are drawing up a list for the next lot of companies from whom bankers can recover their dues using the insolvency route. And we learned that Videocon Industries could be the next company to be referred to the National Company Law Tribunal for insolvency proceedings. Ritu Singh is here with exclusive details. Ritu, looks like Videocon's fate could be sealed by next week.
That's right. We understand from our sources that banks or lenders to Videocon Industries are mulling sending that case to the NCLT, or the National Company Law Tribunal, under the Insolvency and Bankruptcy Code. Remember, this is not one of the companies that was identified by the RBI, but banks are mulling this action given that the company has defaulted in the last couple of quarters for most of its major domestic lenders. Remember, Videocon has a debt of 45,000 crore rupees, out of which about 24,000 is with the domestic lenders. where IDBI Bank and SBI are some of the largest lenders in the 27-member bank consortium. Just last quarter, that is in Q4, Dena Bank was the first bank to declare Videocon Industries as a non-performing assets. But we understand from sources, some of the largest players in the system, including ICICI Bank, State Bank of India, Punjab National Bank, Union Bank, Bank of India, are among the lenders that have also declared Videocon Industries as a non-performing assets as of Q1, following which this action is really coming into play. We also understand that Venugopal Dhoot-led promoters had submitted a turnaround plan for the company, which the lenders are currently auditing or looking into the viability of. But more or less, the decision will be taken next week on whether or not that will be adopted, or what is more likely, the case would be sent to the NCLT.
Okay, Ritu, thanks for that. Now, moving on Thursday, market regulator SEBI charged 13 individuals for alleged insider trading during April 2012 to July 2013 in shares of MCX and its promoter Financial Technologies. Now, who was the CMD of FTIL during that period. In its order, SEBI said that these individuals traded in the shares of MCX and FTIL based on unpublished price-sensitive information. The regulator also ordered impounding of averted losses worth over 125 crore rupees. However, responding to this SEBI order in a press conference for the first time in 4 years, Jignesh Shah denied any violation of insider trading norms. He also claimed that there was a conspiracy against him at the behest of the previous government. Here's what he said.
FMC chairman, when it was a crisis, when there's a fire, you will go and douse the fire, or you will go in a technicality. This is a third experience. And there is common thing between all of them is that it seems, based on the information and apparently processing the things, is that it seems they are very closely working with Mr. P. Chidambaram. There should be an investigation whether they have done on behest of him. If you have not done wrong, please come forward. We are ready to do a public debate in front of media to Mr. P. Chidambaram, Mr. Ramesh Abhishek and KP Krishnan on this.
All right, let's take a short break on that note. Up next, Congress leader Jairam Ramesh challenged the Finance Act in Supreme Court. We will tell you his argument. Welcome back. Senior Congress leader and Rajya Sabha MP Jairam Ramesh moved the Supreme Court today, challenging one of the changes proposed in the finance bill. The plea challenges changes to the eligibility criteria of members for tribunals. Ashwit Kumar is here with the details. Ashwit, this bill was passed as a money bill in the Lok Sabha, which essentially means that Rajya Sabha cannot make amendments to it, but can only recommend amendments. Is that what Ramesh has knocked on the Supreme Court's doors for? Okay, I think we just lost Ashmit's line. But yes, that is a crucial story that we'll be tracking very closely on CNBC-TV18. Let's move on. A quick look at some of the other headlines that we are tracking this evening. Latest on the petition in Supreme Court seeking return of unused land acquired for special economic zones. The plea says that over 30,000 acres of land acquired from farmers remains unused and therefore it should be returned to farmers. The Supreme Court has now said that it is giving states the last chance to file their response on this issue. The taxman crackdown against black money is in full swing. The IT department has registered 50% growth in earthing illicit money during the first 3 months of the current fiscal as against the same period last year. The IT department has seized 103 crore rupees worth of assets and 2,678 crore rupees. The maximum amount of black money was found from raids in South and Central India. Here's another exclusive. Talking of the battle against black money, CBI has filed an FIR against Alok Industries Managing Director Dilip Jivrajka. The agency has alleged that he helped an IRS officer to transfer funds through the firm. Utkarsh Chaturvedi is here with the details. Utkarsh, what are the allegations under which this FIR has been filed and what lies ahead?
Sadhika, the FIR has been filed on alleged charges of abetment under Section 109. Now, CBI alleges that Dilip Jivrajka helped an IRS officer to transfer funds through Alok Industries. Also, the allegations are that the funds were transferred to the IRS officer Vivek Batra in the name of his wife Priyanka Batra. Now, CBI also says that Priyanka Batra was wrongfully shown as an employee of Alok Industries. Even though the quantum of the alleged money transfer is still unknown to us, but CBI has booked Vivek Batra as well in the case of having assets disproportionate to income. We'll have to really wait and watch of how the proceedings go from here, but CBI has indeed filed an FIR against Dilip Jiwarjika, the MD of Alok Industries.
Okay, Utkarsh, thanks for joining in with that. Let's move on to US politics. There's never a dull day in US politics these days, and we now have a fresh controversy. The White House is now battling fresh leaks, this time transcripts from President Trump's conversation with world leaders. Washington Post said that these are excerpts from Trump's calls with heads of Mexico and Australia. Here's a special report from NBC News' Peter Alexander.
Tonight, the president's private calls unfiltered, 1 week after taking office. Admitting to Mexican President Enrique Peña Nieto he's politically cornered. I have to have Mexico pay for the wall. I have to. I've been talking about it for a 2-year period.
Who's going to pay for the wall? Who?
In transcripts of the calls obtained by the Washington Post, the president pressures Peña Nieto to stop publicly saying Mexico won't foot the bill. You cannot say that to the press. Still, Mr. Trump concedes the money would likely come from elsewhere. It'll come out in the wash, and that's okay. On the epidemic of illegal drugs smuggled into the U.S., I won New Hampshire because New Hampshire is a drug-infested den. In New Hampshire today, residents displeased.
I think using drug-infested den is harsh.
I would never say New Hampshire is drug-infested. I would say New Hampshire has its share of the problems like the rest of the country.
Another contentious call the next day with Australia's Prime Minister. The two leaders clashing over an Obama-era agreement that the U.S. admit refugees now detained in Australia. This is going to kill me, as I'm the world's greatest person that does not want to let people into the country. Before abruptly ending the call, Mr. Trump, clearly exasperated, I've had it. This is the most unpleasant call all day. Putin was a pleasant call. This is ridiculous. The White House declining to confirm the authenticity of the transcripts, but the president has repeatedly railed against leaks.
We're going to find the leakers. They're going to pay a big price for leaking.
Tonight, lawmakers condemning the leakers.
These people should be fired. They should be out of government. They're disloyal to our government, and I hope that that's what's going to happen.
Tonight, President Trump back on the road in West Virginia, where support remains strong.
Problems this country is facing were not built in a day. They're not going to be fixed in a day. It's going to take time.